Okay, let's dive into the markets for today. Thursday, May 15th, 2025, Eastern Time. Looking at Prina Capital's data, it really felt like a bit of a tug of war.
Definitely. You had some real strength, particularly in tech, pulling things up.
Right, giving parts of the market a nice lift. But underneath that, you could still sense this undercurrent of caution.
Yeah, probably tied to those geopolitical jitters we keep talking about.
Seems likely. And looking at these financial news sources, indices, bonds, currencies, stocks, it paints quite a detailed picture of that tension.
It really does. You see it playing out across different asset classes.
Absolutely. And for you, the learner, our mission here, as always, is to cut through the noise. We'll pull out the most important insights from today's market snapshot.
Give you that clarity and context, without overwhelming you with data.
Exactly. Your shortcut to understanding today's market story. So, where should we kick things off?
Let's start big picture. The major indices. Kind of a mixed bag there, wasn't it?
It really was. The S&P 500 just crept up a very modest gain, 0.10%, felt tentative.
Barely moved, yeah. But then you look at the NASDAQ composite,
Big difference. That jumped 0.72%, quite significant.
really speaks to that tech sector strength we mentioned, a clear vote of confidence there, wouldn't you
What
say?
you would. Investors are definitely putting their money behind tech right now. But contrasting that, the Dow Jones Industrial Average actually dipped slightly,
Down 0.21%.
which kind of makes you wonder, doesn't it? Are the more traditional industrial companies feeling that caution more? Are their headwinds different?
That's a great point. And it gets even more interesting with the Russell 2000.
The small caps, they fell more sharply, down 0.88%.
Right. So what does that tell us about the environment for smaller companies? Maybe tougher for them right now, cost of capital, uncertainty?
Could be any number of things. It
Yeah.
certainly makes you think. And adding to that feeling of unease, the VIX,
Ah, yes, the volatility
it
index.
jumped almost 3%.
Yeah, 2.95% up. So even with tech doing well, there's still that nervousness lurking.
Definitely. And it wasn't just a U.S. story, was it? Looking internationally.
No, you saw declines across the board. The FTSE in London, the DAX in Germany, Nikkei, Hang Seng, the SSE composite in China, all down.
So broader concerns, maybe? Global growth worries, currency effects, export pressures.
Could be a mix of all those things. Suggests a kind of global caution.
Okay, let's shift gears. What about the bond market? What signals were coming from Treasury yields?
Bonds are always fascinating for gauging sentiment. We saw some pretty interesting moves in yields. The 10-year Treasury note yield, that's a key one.
Right, everyone watches the 10-year.
It saw a pretty big jump, climbed to 4.528%. That's up over 0.6% on the day.
Okay, hold on. A jump like that in the 10-year.
Yeah.
What's the usual interpretation? Inflation fears, strong economy expectations.
Often, yes. It suggests the market might be pricing in either stickier inflation than hoped or maybe a more resilient economy that could keep the Fed holding rates, maybe even hiking.
And that makes longer-term borrowing more expensive, right?
Yeah.
For companies, for mortgages.
Exactly. It ripples through. Now, interestingly, the short end was different. The 13-week T-bill yield,
What happened there?
it was stable, flat, held at 4.285%, no change.
So maybe confidence in the very near term, like no immediate policy shocks expected?
That could be one way to read it, confidence in near-term Fed policy, perhaps, but then you look further out again.
The 30-year bond.
That yield also rose, up to nearly 5%, 4.967% to be exact, up almost 0.5%.
So similar to the 10-year, suggesting long-term growth or inflation expectations.
Potentially. Or it could imply investors are maybe looking for higher returns elsewhere, shifting away from those ultra-long-term safe assets if they expect growth or inflation down the line.
Got it. So the bond market is maybe hinting at longer-term inflation or growth pressures. Okay, currencies. What was the dollar doing?
Currencies also reflected these kinds of dynamics. The US dollar index actually eased back a bit.
Oh, interesting. Dollar weakened. Why might that be?
Could be a shift in sentiment, maybe investors moving into other currencies, or perhaps changing views on U.S. policy or economic direction. A weaker dollar can help U.S. exports, of course.
And the euro. It gained against the dollar.
Just slightly. Euro USD up 0.30%. Maybe a slightly better feeling about the Eurozone outlook or interest rate expectations adjusting there.
But the Japanese yen really stood out. It weakened quite a bit.
It did. USD JPY climbed, meaning the yen lost ground, down over 0.6%. That often comes down to monetary policy divergence.
The Fed versus the Bank of Japan.
Exactly. The Fed's been tighter, the BOJ much looser. That difference puts pressure on the yen.
Makes sense. And the British pound. Sterling.
A modest gain against the dollar. GBP USD up 0.15%, Could be some positive UK data, or maybe just better market perception of the Bank of England's stance.
So currency's painting a picture of these differing global economic paths and policies.
Yeah.
Right, let's take commodities. Raw materials, what was the trend there?
Generally, a downward pressure across the commodities complex today, gold, for instance.
The safe haven, what did it do?
It dipped, down about 0.85%.
So less demand for safety, or maybe just profit-taking?
Could be either, really. Maybe a slight easing of immediate fear, or perhaps people cashing in after gold's recent run-up.
And silver?
Silver fell more, down 1.28%. Since it's both precious and industrial, that might hint at some tempering of manufacturing expectations.
Okay, but the really big moves were in oil, weren't they? WTI and Brent.
Oh, yeah. Significant drops. WTI down over 3.5%, Brent down over 3.3%.
Wow. What's driving that? Demand worries.
That's the likely culprit. Concerns about a global economic slowdown hitting oil demand. Or maybe supply concerns are easing somewhat. It's a big signal, though.
Natural gas also dipped, but not nearly as much.
Right, down just 0.63%. Maybe more stable supply demand there, or perhaps the ongoing shift towards renewables plays a small part.
And copper. Dr. Copper, the economic indicator.
Also down notably, off 1.44%. Given its use in everything from construction to electronics, that potentially signals reduced industrial activity expectations.
So a cooling trend in commodities, especially energy and industrial metals, suggests some economic growth concerns bubbling up.
Yeah.
Okay, how did this filter through to ETFs, the sector baskets?
ETFs really show the divergence. Tech-focused ETFs, as you'd expect.
Strong performance, mirroring the NASDAQ.
Up 0.65%, continued confidence there. But then healthcare ETFs.
Ouch. Down 2.35%. That's a big drop. What's going on there?
Often it's about potential regulatory changes, policy uncertainty, things that make investors nervous about the healthcare space.
In financials, the banks and insurers.
They saw a modest decrease, down 0.27%. Still some lingering questions about interest rates, regulation, that sort of thing.
Energy ETFs presumably down with oil prices.
Yep, down 0.61%, directly linked to that oil volatility.
Yeah.
And the small cap ETF.
Down too, like the Russell 2000 index itself.
Right, down 0.89%, reinforces that idea of challenges for smaller firms right now.
But interestingly, you noted a slight gain in an innovation-focused ETF.
Yes, a 0.26%. So even with broader caution, there's still selective appetite for those potentially disruptive, high-growth tech stories. Investors are picking their spots.
Fascinating. A very sector-specific story in the ETF world. Okay, let's drill down one more level. Individual stocks. Some really big movers today.
Absolutely. This is where you really see the themes play out. Tech sector, obviously, NVIDIA.
Huge day for them, up over 4%.
Massive, 4.16%. The AI excitement is just palpable around them. Their role in semiconductors for AI is key.
Microsoft also had a decent day, up 0.85%. But then Apple,
Apple was slightly down, 0.28%, and Intel.
a big drop for Intel, down 4.61%. That's a major contrast with Intech.
It really is. Shows the competitive pressures Intel's facing, especially in chips. Meanwhile, Tesla,
Also a strong day for Tesla, up over 4% as well.
4.07%. Continued optimism around EVs, autonomous driving, all that tech focus.
Okay, shifting to financials, we saw strength there.
We did. JP Morgan Chase up 1%, Goldman Sachs up 1.29%, Bank of America up 1.04%. Seems like positive sentiment returned to the big banks today.
But healthcare stocks like the ETS were mostly lower.
Yeah, mirroring the sector trend. Johnson & Johnson down 1.4%, Pfizer down 3.72%, Merck down 4.12%. Definite pressure there.
And energy stocks, ExxonMobil, Chevron.
Down slightly, tracking oil. ExxonMobil off 0.9%, Chevron down 0.48%.
And consumer goods, staples like P&G, Coke.
Pretty stable. Procter & Gamble down just a bit, 0.45%. Coca-Cola actually up slightly, 0.29%. Kind of suggests resilience in those everyday items.
Okay, let's really zone in on this tech and AI theme. It feels like the dominant narrative. You highlighted NVIDIA. AMD also had a strong day, up near 4.7%.
Yes, AMD almost 4.7%. It's all about the hardware powering AI. These semiconductor companies are absolutely critical for machine learning, data centers.
The building blocks.
Exactly. The market is placing huge value on their role in this AI expansion.
In Tesla's strengths, you link to EVs and autonomous driving, again, very tech-heavy.
Right. And Alphabet, Google's parent, also up nicely, 3.66%, likely tied to their own AI integration in search, ads, cloud.
But then we saw that divergence. Apple, Amazon slightly down, Intel significantly down.
It really highlights this maybe a dynamic shift happening, while some tech titans are maybe navigating headwinds or competition.
Like Intel's chip challenges?
Precisely. The companies seen as the core enablers of the AI boom are getting the real investor focus right now.
And Microsoft and Meta. Modest gains. You called it steady confidence.
Yeah, they're obviously huge players deeply involved in AI, but perhaps the market sees their immediate growth trajectory in AI as maybe less explosive right now compared to the pure play hardware providers. Still positive, just not that NVIDIA level surge.
And it's interesting, the mix in enterprise software and data analytics, Salesforce, Snowflake, Palantir, saw small gains.
Slight increases there.
While consumer tech like Uber and Airbnb were down. Any read on that?
Could suggest a bit more confidence in business spending on tech versus consumer discretionary spending, maybe tied back to those broader economic uncertainties.
Possibly. And even C3.ai, an AI-specific company, saw a minor dip.
Right. Shows there's still volatility and differentiation even within the hot AI space itself. Investors are still figuring out the long-term winners.
So boiling it down, the big story seems to be this intense investor enthusiasm for AI innovators and the semiconductor firms making it possible, even while other parts of tech and the market overall show more caution.
That really captures the essence of today, I think.
Okay, so wrapping up. Definitely a day of mixed signals. Tech, especially AI-related names, provided the main thrust upwards.
But caution was evident elsewhere, likely linked to geopolitics and maybe global growth concerns.
We saw bond yields sending somewhat conflicting signals, maybe short-term stability but longer-term inflation or growth worries.
Currencies reflected different global economic paths and policies.
And commodities, particularly oil and copper, trended down, flashing potential warnings about demand.
And within stocks, a clear divergence, with AI and semiconductors being the real standouts.
Right. So that leads to our final thought for you, our listener. Given this powerful performance in AI stocks, against a backdrop of a more cautious, mixed market, what might this signal about the future?
Yeah, think about the direction of economic growth. Which sectors do you see being most transformed positively or negatively by this relentless drive in technological innovation, especially AI?
It really makes you consider that interplay, doesn't it? Between cutting-edge tech and the traditional forces shaping our economy and markets.
Yeah.
Something to mull over.